Hello, everyone. Excuse me, and welcome to today's cryptocurrencies update for April 6, 2022. The anticipated pullback is underway, but remember, in bear markets, upside disappoints and downside surprises. So let's have a look how this is transpiring among many different cryptos. First up, I'm going to start with the big boys, the Bitcoins and the Ethereums. I was looking on Wednesday for this last wave 5 of 3 higher, but we didn't get it. So I have to adjust it to wave 4 of 3 lower. That's simply the way it is. We didn't get the breakout. We had technically done enough a couple of days ago for this gray wave 4, and it looks like gray wave 4 is subdividing instead. Please remember that I prefer the view that we're in a larger B wave bounce, and B waves consist of many overlapping waves. There doesn't really have to be any rhyme or reason to this, as long as it just kind of overlappingly moves higher. Just because we get an overlap between 1 and 4 can easily be an AB, ABC. Again, there doesn't have to be an impulse. Please keep that in mind, that in bounces, anything is almost essentially possible. Just as we had here in February, almost a low that challenged the January low. Absolutely fine for a B wave of a B wave. And now in a C wave, it should be 5 waves, but it can be overlapping diagonal wise, all those bad things, so to say. So please expect the unexpected currently. That is really the name of the game. Upside disappoints, downside surprises. We reached the 100% extension already, so the B wave can even already be over. Okay, we reached the 100% extension of wave A, measured from wave B here in black. We reached the 100% extension of wave A, measured from wave B in red. So technically we can already have enough. Then it's all 3s and 3s and 3s. Simply we have to live with it. Then we did only a 38.2% retrace of the entire decline since November, and not as high as 50 to 76.4% with the 62% preferred. It doesn't have to be that way. Please remember, bounces disappoint, upside disappoints. So this is why you have to have tight stops, take profits, all those things on the way up, because you have to anticipate that the upside will not last as long as in a bear market bounce as it is in a bull market rally. In bull markets, upside surprises. In bear markets, downside surprises. So I'm not surprised the last 2 days actually happened. I really was looking forward to a wave 5, but it seems like we have to wait for that one. Same here for Ethereum. We topped here for a wave 5 of 3 and a little bit shy of the ideal upside target at around 3,600. It's fine. It did what it did. We have 5 waves higher from this mid-March low, so to say, 1, 2, 3, 4, 5. We should now be in this gray wave 4. Support here is at 3065. Simple, really, really simple. It is even possible that this B wave is already complete. I will put that option on the table once we start going below 2750. Again, we don't have to necessarily do all the waves in a B wave. B waves are inherently tricky, sloppy, overlapping POSs, so to say. They're just highly unpredictable. All we know is that it has to be 3 waves, and then it's just a matter of how are those 3 waves gonna fill themselves in. Yes, we have some, of course, ideal, standard, textbook, Fibonacci-based targets, and we've reached all the targets. Remember, the green one, the red one, the black one, everything has been reached, okay? We don't have to go this high, it doesn't have to. We have reached green, red, and black, so caution is advised. That's always the case. That's what these target zones are for, to the upside and the downside. As you can see, we reached the 50% retrace here perfectly. We almost reached the 161.8% extension, upside target right there. And we reached also in red a little bit over the 100% extension. So we've technically done enough. It's not my preferred view. It's not. I still prefer a little bit higher, based on the fact that I would like to see a 5-wave impulse. But again, it's not necessary. The market can sneak in any wave it wants, so to say, that I cannot assess until afterwards. as everybody else, I have my limitations. I'm not a god. I don't know everything beforehand. I'm honest about it. And honesty keeps my trading account most of the time in the green. That's what honesty does. All right. Arrogance will cause my trading account to go red because then I won't have stops and I think I know everything. Well, I know a lot about a little. And that's really what I'm trying to convey here. I'm not washing my hands in innocence, but please remember the market environment we're in. We're in a bounce, and so far I see no reason to change the point of view because of the overlapping nature that I'm seeing continuously happening. So please keep that in mind, always. Let's go to Binance Coin. This was the original point of view of Binance. We were stuck in the side mess for 2 months. We got the breakout, ideally targeting 150. Well, it failed already at resistance here at 465. We got there pretty much yesterday. I think we got 461. And that's as far as it got. Again, it doesn't have to, right? That is the symmetry-based target. This is the condition, this is the trigger, and then you have to see if it's going to follow it. So far, it did everything. It broke out, retested the breakout, went higher, and now we're back at it again. So I have decided to update the short-term wave count and make it much, much better. The reason is, if I looked at the monthly time frame, that I was expecting this B wave bounce and then a C wave lower. So this current chart doesn't really help me. So I'm going to ditch this one. End result is still the same. Don't worry about it. It's just more detail. I think the current wave count was incorrect, and this wave count is much better. We have A, B, and then 5 waves lower for wave C. At the late February low, picture perfect, 1, 2, 3, 4, 5, wave 3. So far, so good. 5 waves lower, I like it. And now I can do very nice Fibonacci stuff. Okay, if the Fibonacci's overlap, then I think the wave count is much better. So this new updated preferred model 2.0 wave count for Binance Coin looks much better. An A wave higher, this was 3 waves, 1, 2, 3, follow my cursor, 1, 2, 3, loud and clear. This is for everybody to see. 3 waves lower, A, B, C. And then we rallied so far right into the 100% extension. It's a little hard to see here because of the overlap with other Fibonacci extensions. 100% is right here, and this is the normal in green C wave target zone between 100 to 161.8. Well, we only got the 100, so A, B, C. So you measure the length of wave A from the start of wave C, which is the end of wave B, obviously. A, B, C, perfect. 1, 2, 3, 4, 5 waves higher. Good. So now we should be in a retrace back to about 407 to 374. That's the ideal B of B. A, B, C. Remember, it's a bounce. B is for bounce. B waves are always 3 waves. Nothing more, nothing less. And those 3 waves can be 535, 333, 335, 533, whatever it wants to do, as long as the B wave is 3. Everything else can do whatever it wants to do. That's the nature of the market I continuously point towards. It can do whatever it wants to do. The A wave can do whatever it wants to do. The B wave, C wave. So that's the inherent problem then with trying to forecast exactly what's going to happen. If it's a 3 wave A wave, it's much harder than a 5 wave A wave. You just don't know beforehand. But we do know that these things can happen. That's the amazing part. We do know it, that these can happen, so we simply have to follow and track along. Regardless, we are now most likely in this B wave retrace, which can stall anywhere at, I would say, 510 plus or minus 5, or it dropped to 375 plus or minus 5, and then we rally. So the upside target here still remains the same. This is the bounce target zone, okay? It all depends on where this red B wave is going to bottom, because remember, red B is part of black B. Once black B tops, we get black C, A, B, C. Okay, so far so good. I use the monthly chart to adjust the daily chart, because the monthly chart is much clearer, because it really projects much better than all these daily scribbles. All these daily scribbles are confusing. Is this wave 3-4? Is this wave 3-4? Zoom out, see the forest through the trees, et voila. We still get a much better wave count. Hasn't changed much at all, honestly. I simply moved the label from the January low to the February low. Fits better. It's all nice and dandy. It's good. It's great. And we now start to see these Fibonacci levels hit the levels they're supposed to hit. So far, 38.2% retrace. It's quite normal for an A wave of a B wave, and then we get wave B, and then we should see wave C, as long as we hold the March lows. If we go drop below the March lows, things start to get a little tricky. So far, so good. I like it. Cardano. Remember, Cardano said it should be in wave A, and then we get a wave B, and then a wave C, because B is for bounce in blue, and that's, again, just 3 waves. Always the case. Well, we fell a little bit short of the 130 target zone. This is why I say in bear markets, upside disappoints. Okay, we start off with, okay, I think it's going to go here. Let's track and follow along. And we got pretty close. I think it went to about 125. So not too far off. It's just that we get a little bit of that disappointment. And that is just inherent. So now we can move the B wave target zone a little bit lower as well. So this should be ideally wave A. We should now be in wave B. Wave B can go this low. We don't know yet. That can have bottomed already, but given that wave A took about a month, this B wave should last a little bit longer than 2 days. And now we can then adjust the C wave target zone. Oops. Now that we are pretty certain, of course not entirely certain, but pretty certain, there are no 100% certainties in the market, never is, never will be, that wave A has stopped. So I'm going to label it still as a question mark, but pretty certain. Let's assume wave B is going to bottom here at 61.8% retrace. Okay, there, 61.8%. Then wave C should top somewhere in this zone. I still, of course, have not enough information available to even know where wave B is going to bottom. But let's start with this assumption. We anticipate, we monitor, and we adjust. No need to front run. We'll have to eventually see what the market tells us where it wants to bottom for this B wave. And then we can adjust the C wave accordingly. I had the initial C wave already based on the initial parameters that wave A should go to 135-ish, plus or minus 5. Wave B should then have gone to $1, plus or minus 5. And then wave C, of course, was a little bit higher. Now that more price data is available, we adjust. You anticipate, you monitor, you adjust. You anticipate 135, that is normal. We don't get it, we get about 125, then you adjust accordingly. Very simple, no need to front run, easy as 1, 2, 3. It really honestly is, there's no real magic to it, so to say. And this is as far as you can look around the corner. This is why I always say you can only look around 2-3 quarters at a time, at the most. Okay, your accuracy, of course, diminishes the further out you go. It's just like weather forecasting. All right, every day further away, the weather forecast probability decreases. For tomorrow, 75% chance. The day after tomorrow is 75% of 75%. And the day after that is 75%. So you rapidly decrease. If you're 4 or 5 days out, the uncertainty is quite large because you keep on multiplying the 75%. And at the end, after 5 days, I think you're only left with 30% certainty. It's not much better than that. That's the weather forecast. I'm not going to go into global warming models. That's a whole other story. All right, here we go. Then we look at Avalanche. Well, Avalanche, SOB, this is quite the tricky one. Another false breakout. This is why I said the $1.90 level needs to hold. It didn't. It did. It broke out again, and as such, I have been able to update the wave count quite nicely, which I hadn't on the chart for a long time. But it looks like we have potentially completed a nice B wave. All right, the breakout was something to go long on, absolutely, but that doesn't mean the breakout will reach it. Again, if bear markets upside disappoints. We got to about 102.05, getting close to 110, 127.5. That would have been ideal based on this quite nice triangular pattern. The triangle was the condition. We got the breakout and it failed. And I wish it didn't. I really was looking for 110-ish because that would get us to the 62% retrace of this entire decline from November into January. It didn't. So now it looks like wave B might have completed. This is why we have stops in place. So honestly, this was a round trip trade that if you were long, I would say since the breakout of $1.90 would have led to a tiniest of losses, honestly. That's why you have stops in place. All right, you say, okay, it's going to go below 90, I'm out. Easy peasy, honestly. There's no guarantee you'll get winning trades, but this is a weak stock or cryptocurrency. It's weak. Don't like it. Luna. Now Luna did perfectly what I wanted it to do. 115, 125, target zone reached, strong reversal. Caution is advised. Enough waves are in place to suggest that wave 5 has completed. So please be advised. Again, we don't have to go to 125 based on the symmetry target that I originally had. We have a target zone, and when target zones are reached, I 9 out of 10 times suggest scaling out, this type of stuff. If things move higher or lower, whichever way you go, most people are unable to short the cryptocurrencies because of leveraging issues, margin call issues, margin, all that stuff. But from the upside perspective, when target zones are reached, raise stops, scale out, that type of stuff. And if things move higher, continue to move higher, which they often do, in cryptocurrencies, you can always re-enter, right? That's very simple strategy. Please look on my website how to use my work. Here's another weak one, Polygon. It had to break above 175-ish. That was the 200-day moving average. It did not. So we had the condition, that was the triangle or the wedge or the diagonal, whatever you want to call it. Then we got the signal, and the signal suggested we can go this high. That is then what we prefer to see, this breakout. I can show you 10 patterns where this continuously works. It's still possible, but so far we failed at 175. We got the breakout and it failed. Okay, this is a weak one below the 200-day. I always say, please know your environment. This is much stronger when we're above the 50-day and the 200-day, and here we're below the 50-day and the 200-day. A little bit above it for a while, but again, failure. Can it still move to the target zone? Yes, it can, but we need to break above 175. We have to, otherwise it won't work. All right, so Solana, I've also been able to work on this wave count a little bit better based on the monthly chart, and it looks like we've completed wave A. We're now in wave B, and we should hopefully see another wave C. I say hopefully because technically the bounce has already done enough to consider it complete, but I'd like to have a little bit longer duration of a bounce than a couple of weeks. Why? Because the duration of the decline was many months. It's a little odd to see a bounce last a couple of weeks. Time symmetry wise, that doesn't look too good. So A, B, C, similar as the other cryptocurrencies, the Ethereums, the Bitcoins, the Binance coins, and all that stuff. So this is, I think, in line. Most of the time, these cryptos do work in unison. Some are delayed, some are a little before. It's all good, but resistance was at 127. It turned into support, and now it is resistance once again. We're now at 115 support. Okay, so the easy part of the trade was over. The easy part of the trade was the initial symmetry-based upside target. It was reached around, I said, 130 plus or minus 10. So we reached it. We got as high as 144 almost. And now we should subdivide. Again, B waves are tricky because they're subdividing into 3 waves. And it's a little hard to know where exactly the first A wave tops. And now we have a clear indication this first A wave tops. And I have no indication yet where this B wave is going to bottom. It's going to be anywhere between, I would say, 115 and 95. Wouldn't surprise me if we go back all the way to 95. And then we can adjust the C wave target. I have here I have assumed the B wave will bottom at around 105. And then this is the typical C wave target zone. Still gets us to around 200. That's been my ideal upside target for this bounce as well. So I like the fact that, for example, Solana, it's a reasonably large cryptocurrency. Bitcoin, Ethereum, Binance Coin, all those ones are starting to align for even Cardano for bounces, right? All of them subdividing bounces. So that's good. So we have a lot of indications that these cryptocurrencies are aligning as they did for many months into the recent lows. This continuous declines match very well. So then the bounce should match pretty well also. So that looks good. So that gives me some confidence in that. That is a good assessment. Let's see here. Trading results are in for year to date on Ethereum and Bitcoin. You can see it on my website. That said, bottom line, Cardano, I was looking for a bounce for wave A, B, and C. So in italic is what I wrote on Wednesday, and then in large caps and regulars is what we see so far. So on Wednesday, I was looking for a wave A to complete soon and a wave pullback to follow. Tada, wave B is underway. No surprises, so far so good. Avalanche, I was looking for 110, 127.5 as the short-term upside target zone. It reached 102.5, so we had a breakout retest on Wednesday. That must hold, I said on Wednesday, to allow to reach the upper end or the target zone better. Well, we did not. That was the support zone. It fell short of the upside target. Bear market rallies disappoint. The updated wave count suggests that we have completed a B wave bounce, right at nice retrace levels as well for this B wave. Binance Coin, 430. I said over 465 targets 400. Okay, we didn't get there. We got 461 and 430 was support. Was close to not holding support, so I changed and I think it improved the Elliott wave count, where we're now in wave B of wave B. I like it. Bitcoin, I had to change the wave count from a 5 of 3 to a 4 of 3, and I still expect more upside. But please remember, B waves are very tricky, can do essentially anything they want. So please be cautious. Ethereum, also here, had to change the wave count from a 5 of 5 to a 4 of C. So we're already further along in Ethereum as well. I still prefer a little bit higher, and I'll continue to see this as a pullback. That was what I said on Wednesday, that upside continues, but expect a pullback soon. That was pretty much the start of the slide on Wednesday. Luna reached even deeper into the 115, 125 target zone, has now reversed. So please caution. I think we got to 118. It doesn't get better than this one. Matic failed to break out because on Wednesday I said it must break above the 200-day moving average to target 210. It didn't. And if it doesn't break out, that is bearish until proven otherwise. Solana, the preferred wave counts was for a bounce to 200 to 20 for wave B. Okay, and I was looking for 148, 161 to be reached. I think we got 146 or something like that. I have to check, but I have updated the wave count, detailed it, and it looks like wave A of wave B has completed. We're now wave B of wave B, and it's still the C wave to come. See the charts for those upside targets. And I think we're going to be in a little bit of a rough patch for the next couple of days. But otherwise, so far, things for some of these cryptocurrencies are progressing quite nicely, like Luna, Cardano, Binance Coin, etc. Some others failed, like Matic. So it happens. Not everything can always be forecasted exactly to the T. But please be advised, and please remember the market environment we're in. This is, in my humble opinion, still a counter trend rally, and as such, they are a little tricky to navigate. So please consider that when you enter any trades. And with that, thank you so much for listening. Thank you so much for being a Value Premium member. Take care, trade safe. See you on Friday. Bye.